Hey guys, this is Andrew Keene from KeeneOnTheMarket.com. I can also be followed on Twitter, KeeneOnMarket. Another day, another earnings. Stock I want to look at this time is Chipotle, CMG. They have earnings after the bell. Last week, I talked about JP Morgan. I bought the at-the-money straddle. What does that mean? I bought the at-the-money call, at-the-money put, the 34 line. I paid $1.44 for this. On expiration, it closed at 207, so that was good for 35% returns overnight. So this time in CMG, instead of picking a direction of which way I think the stock's going to do, I want to fade the movement. Last time in JP Morgan, I bought the movement. This time I want to fade it. The last 4 quarters on earnings, CMG has only moved 3.2% on average. Only once over the last 4 quarters has it moved over this 3.2%. The implied movement is 4.5%. So I don't think it's going to make this big of a move. So in this strategy, I can do one of a couple things. The thing I wanted to do was sell a condor. What does this mean? Very simple. I sold the weekly or July 380, 375 put spread, but I also sold the 410, 415 call spread. So I sold a put spread, sold a call spread. It's $5 strikes. The most it can be worth is $5 or $500 per one lot. I did it for $1.90. So the most I can lose is the $5 minus $1.90 I sold it for, $3.10 or $310 per one lot, and I can make $1.90 or $190 per one lot. I think this sets up good risk versus reward. On the downside, I basically get long CMG at 378.10. I'm stopped out at 375. To the upside, I get shorted at 411.80, and I get stopped at 415. There's things I like about Chipotle, there's things I don't like about Chipotle. They don't have a big exposure to the European debt crisis, which is good. Most of their sales do come to the United States. They started opening some stores in China as well. What do I like about the company? Basically that, there's no European exposure. Also the fact that the stock is above the 50-day moving average and it's found support at this 200-day moving average around $380. Things I don't like. It's very, very expensive on a PE. It's trading about 55 when Starbucks and McDonald's are both very, very cheaper. So this is a strategy I want to put on. I don't want to pick the direction of which way it'll move. I want to fade the movement in CMG. This is Andrew Keene from KeeneOnTheMarket.com. If you want a free trial to our live trading room, equity options, futures, and Forex, you can email sales@KeeneOnTheMarket.com. See you guys next week for another earnings trade.